Number 9 is your conviction or behavior gap. For example, when a stock is performing very well, you go and buy that stock and you get returns. Let's say 30% return, 40% return. And the moment the stock starts to fall down, you can either buy or you can just hold on to your position. But when the stock goes below down, like further down, and it creates losses for you, at that point of time, what happens is you might panic because you did not invest with good confidence or conviction, and this often leads to something called behavior gap, where you buy high and sell low, whereas a normal retail investor should have done the opposite of it, which is buy low and sell high. But because they invested without conviction, without doing much of a research, not knowing why that stock is falling and will it rise up in future, because of these emotional reasons, a lot of retail investors lose money. This is simply because of greed and fear.